Good morning, everyone. Today is February the 6th, and this is the Futures in 5, taking a look at 5 futures markets and watching price action. We are at the top of congestion. Yesterday, we did move into 2738. I thought 2740 might be the big number, but this wick here at the 2734.50 seems to be giving us little bit of trouble. So I'm going to say, hey, if we breach that and hold it, then we've got another stretch up into 2748. My thought is that we do have the possibility of getting to 2760 and then 2770 before this is all done. This is a thin auction profile event, and so we might want to fill this in. That gives us another rise. For the folks who are swing short, this is going to hurt just a little bit. Now, you know my bias is generally that we are going to bounce into a fade that loses, but you can't stay short in this kind of space. One, without hedging, or two, without losing your hair and a lot of capital. So even if it is just paper capital because you have not sold out or bought to cover, this becomes very difficult for traders. This is going to be the next leg up of squeeze action we see potentially for traders. Listen, it's bullish. No matter how you look at this, it's bullish. Here's the big thing. You need to buy at support and then allow it to go into resistance. The breakout formations are very tricky here. They're going to expand your risk dramatically. Taking a look at the NQ, same sort of thing. It's moved quite a bit more, moving a bit more rapidly to the upside. And that area now sitting right here. Well, we're close to these edges that we are considering. And so we're going to have to watch them. In general, this could be the final exhaustion pattern here up into this region because the form is the same. Can we get up to the top of this zone? And then what happens? Every time we've been up here, folks, we've sold. Every visible opportunity that we've seen here has sold once it got to target. And so we'll be watching range expansions to potentially fade. So what does that mean? Don't buy the top. Wait for a pullback and allow that pullback to engage you into the trade. That's really what we are looking at in general. Taking a look at the YM, also sitting about the same way as the ES is sitting, not like the NQ, coming up into the resistance zone. Really, that number is still very important. We've got a gap action event at around 644 and a volume pressure event that's pushing us forward with less volume, but we are grinding upward and retracing this entire amount. What is my overall mindset for where we are running in the big picture? Potentially a higher range that sits sideways for a bit. So, upside pressure, we're going to take what the market gives us. We're going to take what the market gives us, and it's saying, listen, pullbacks or buy zones. Doesn't really matter that I think it's going to fade eventually. Until it fades, I will not engage in swing shorts. I'm standing in front of a freight train. Why would I want to do that? Okay, so pullbacks or buy zones. How do you know that your chart is going to stall out? That's really straightforward. It stops staying higher. Doesn't mean it doesn't test higher, but it will reject that level and then come back into a support zone. As long as it holds support the first time it pulls back, you can stay and engage into the next time. But the failure to break and hold higher is going to be the line that we all have to watch. And it's important to have a big picture event of what's happening in general. Forgive me for that static. I have no idea where I came across. Taking a look at oil, we had an exhaustion pattern here. In the blog, I wrote that, hey, listen, we've got potential exhaustion pattern here from a couple of days back. What are we doing? Coming into the same range base. Take a look at this line, and then potentially, as I mentioned yesterday, we could look at that line. This is a broadening upside wedge, and so it tells us that we are range based. How do you look at the day? All right, yesterday's low, that's the close on the day yesterday. We can't get up and over it. As long as we can't get up and over that, probably not a long. If we come into deep support, then we're looking at everywhere else over the last few days, people buying. So we're going to assume that they're going to buy again. What do? We wait for them to start buying, watch them hold the level, and then we engage. You don't get any uh, points for standing in oncoming traffic. What's great is if you can catch the tailwind so that where you are, you're actually in the group that's pulling price in the direction that you want to go. For gold, this is also a very interesting one. I don't know why this stinker resorts to February. Let's get back to March. And then let's put it on a